Would you be interested in managing other money? Well, I do manage other people's money, but I don't manage other people's money unless I meet you in person. We have a nice conversation, we have some lunch, whatnot, and we see if we actually like each other. Because I don't invest for just anybody. I only invest with people that I know, which means we'll have to have conversations for a couple of weeks over the phone. Now, you're relatively new here. Great. Well, stick around, check out my videos, see what kind of a person I am, see what kind of investing that I do, and see if you like it. And if that all works, then you get to fly down here to St. Petersburg. We get to go out and we get to, chat, see if we get along. I have money in YBTC and Misty. You are scaring me. I haven't seen much of capital depreciation. Okay. I don't mean to scare you whatsoever, John. I don't, seriously. I invest a certain way. That's all I'm looking for. I'm looking for a simple, safe, predictable, consistent 1% per week. Now, YBTC and MSTY, they haven't been around that long. So how do you know the company's actually making that money, or are they taking other people's money to pay off those dividends? So if you take a look at the dividends on Misty, hold on, let's go up. MSTY, Yield Max MSTR ETF, okay? There it is right there, right? Yield Max MSTR Income Strategy ETF MSTY. It's at 2240. Okay, these are what the dividends look like. So the dividend is your portion of the company's profits. Okay, you can't get away from facts. Facts are facts. The dividend is your portion of the profits. So if you bought Misty when it first started, your very first dividend would have been $4.12. Okay. Well, now it went from $4.12. Now it's down to $1.23. That's not consistent profitability. That's going backwards. You start out with a bang and you end up with a bust. Don't get me wrong, I'm not trying to scare you or anything, but let's take a look at the numbers. Historical prices. Okay, so Misty, let's go all the way back to the very beginning with Misty, because this is every single stock option, every single one. Okay, so February 22nd, 2024 was the very first trade for MSTY. Okay, it opened up at $20.38. Okay, by March it's at 41, 45. Then it dropped down to 26 to 30 to 30 to 35 to 34 to 38 to 31 to 29 to 28, 25 to 28 to 27, 22. 24, 23, 20, 25, 24, 27, 30, 30, 27, 30, 35, 37. 2024, we're at 35, at 31. Now we're at 28. Now we're 27, 27, 26, 24, 20, 21, 18, 21, 22, 18, 20, 21, 24, 22, 23. Where are we now? 20. Okay, so it was at a high of 35. Oh, wait a minute, wasn't it like 40? Anyway, but now we're at 21. So yeah, it's not really going up. But it's only been a year and a half. So if you like it, fine. If it works for you, great. Because every company's got to start somewhere. So this company started a year and a half ago. Fine. What is it going to do over the next 5, 10, 15, 20 years? I don't know. See, now my assumption, John, is it Jean or is it Jean? I have no idea. Okay. Is it, okay, are you retired? Are you in your 40s? Are you in your 50s? Are you in your 20s? Are you in your 60s? I have no idea where you are in your life. I'm 61. I'm retired. I don't punch a time clock anymore. That means the money that I have has to last me for the rest of my life. I'm not relying on the federal government. Hell no. So whatever I have has to last me. So I don't take unnecessary risks. And for me, a company that's 1.5 years old, well, that's risky. We'll take a look at Ford. It's been around for 100 years. General Motors, 100 years. Harley Davidson, over 100 years. Procter & Gamble, AT&T. IBM's only been around since the 1960s. So, you know what, 50 years, 60 years, something like that. But as I said, like in the beginning, we're all different. We're all on a different path. We all have different objectives. Mine is simple, and I don't hide the fact. You actually go into YouTube and you see I have 1,100 videos. Well, if you watch the videos, I say the exact same thing for the last 15 years. Simple, safe, predictable, consistent, 1% per week. The trading strategy was created specifically for my 9-year-old daughter. In 2008, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" Now, who the hell expects a 9-year-old little girl to say, "Daddy, can you teach me how to trade stocks?" Well, that's what she did. So how do you teach a 9-year-old when most adults don't understand it? Did you already do PLTY and MSTY? Yeah, I already did MSTY. PLTY is going to be the exact same thing. Let's go PLTY. PLTY. Okay, so when my 9-year-old jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" Fine. Well, I had to create a trading strategy specifically for her. It had to be simple because she's only 9 years old. It had to be safe because she really didn't know what she was doing. The profits needed to be consistent, okay? And she had to be able to do it in a very short period of time, because how do you hold the attention of a 9-year-old girl? Oh, it had to be simple. All right, so all that being said, here's PLTY. Okay, historical data, dividends only. Okay, see, dividends only, all the way back. It goes back to 81. No, wait a second. Hold on. Okay, so PLTY, November 2024. And then look at these dividends. 220, 330, 350, 290, 590, 530, 467. Now it's at 320. So May was $7 per share. And then they cut it in half. Now, if I am retired and all of a sudden I'm getting $700 a week, great. Now they're cutting it down to 320. Go. So if I get 1,000 shares, okay, 1,000 shares are getting me $700 in the month of May. The month of June, well, now I'm only getting 320. Explain to me why you think that's good. Because when you're retired, you have what's called a fixed income. Okay, fixed income. That's what all us retired folks have. Okay, I don't punch a time clock, which means I've got to figure it out myself. So I like companies that are consistent, meaning the profits are consistent. Let me show you one quickly so you get an idea. Now, we all know who Microsoft is, right? Well, let's take a look at Microsoft. 2005, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 51, 56, 62, 68, 75, 83. Each and every single dividend, each and every single year was higher and higher and higher. Do you not have a pension? No, Rocco, I don't have a pension. Pensions disappeared years ago. I'm not that old. They stopped doing pensions, I believe, back in the 80s. Heike. What the heck is Heike, Gen X? Alacran, how you doing? Jay Caton, what's going on? So, needless to say, I'm looking for companies that are consistently profitable, meaning their dividends are one on top of another. Okay, J-Man, Walmart, love Walmart. Football Hike, there you go. Hike, what the heck is Hike? Oh, wait a second, we need okay, Okay, give me a second while I get this one in order. Alrighty, there we go. Okay, so he wants to take a look at Hike, H-I-K. What the heck is that? H-I-K-E. No such thing. S-C-H-D? Oh, hell no. S-C-H-D. Okay, I don't like SCHD. Let's go back to Yahoo Finance and find out exactly why I don't like SCHD. SCHD. So for some strange reason, I might be miscommunicating. Because when I say I only want companies that are consistently profitable, meaning that their dividend should be higher and higher and higher each and every single year. So this thing only goes back to 2011. That's not 20 years. That's not 2 decades. What is that, 14 years? Now, that might be okay for some of you, but let's take a look at the numbers. 4 cents, 4.6, 6.8, 6.6, that's going backwards. 7.5, 8.2, 8.9, 9.9, 8.1, that's backwards for the second time. Then it went to 13, then it went back to 10. That's backwards 3 times. 10, 11, 11, 12, 11, there's 4 times. 14, 14, 18, 20, 16, there's 5 times it went backwards. 18, 17, 6 times it went backwards. 23, 21, 7 times it went backwards. 24, 20, 8 times it went backwards. 25, 26, 24, 9 times it went backwards. 26. So in the last 13, well, how many years was that? 2025 from 2011. That's 14 years. Wait a minute. Yeah, 14 years. So in 14 years, it went backwards 9 times. So it went up 5 times and it went backwards 9 times. Why do you think that's good? Oh, shit. Right. Seriously, right. QQQI. Wait a second. QQQI. I don't see why you guys don't look at the numbers when you're buying stuff. Okay, so QQQI, the time frame we're looking at, December 1981 to 2025. Well, this thing only has 1.5 years of dividends. Right, 1.5 years. Look at the numbers. 59, 60, 58, backwards. 61, 62, 61, backwards. 64, 60, backwards. 61, 61, 62, 64, 61, backwards. 58, backwards. 53, backwards. 63, 62, backwards. So it went backwards more times than it went up. Try CCJ. Really? I don't know why you guys don't even look at this shit yourself. CCJ. CCJ. Never heard of this one either. Okay, Cameron Corporation, CCJ. Okay, 2011, 2009, 8765. Oh, look at this one. This one actually has 20 years. Rocco, you sent me a DM. Awesome. Cool beans. Uh-oh, hold on a second. James, would you recommend your strategy to a 23-year-old, or can I afford a riskier strategy? Now, James, you are young, dude. You're 23. Okay, I'm 61. Huge difference. I will give you all my money, everything I have, and if we can switch positions, I'll be 23 again, and you could be 61. Damn, 23, you have any idea the advantages you have over what I had when I was 23? Hell no. All right. Gene, I reinvested half of my dividends back into YBC and MSTY. I recouped the rest as passive income. There's nothing wrong with that at all. If that works for you, that's awesome. I applaud you. You got something you want to do? Great. Now, I do have to admit, some of the stocks I look at are boring as hell. AT&T, Ford, General Motors, Harley Davidson, Procter & Gamble, Lowe's, Home Depot. These companies barely move at all. But you know, the difference between the companies that I do that are over 50 years old, 5 decades, they're consistent. They're predictable. It's like setting a clock. That's why the first book I ever wrote was How to Get 10 to 20 Checks per Month Like Clockwork. It was talking about dividend capturing, because companies consistently pay a dividend, especially when they're profitable. And if you just buy the stock, capture the dividend, buy the stock, capture the dividend, buy the stock, capture the dividend, well, you can get 10 to 20 checks every single month. Sent me a DM. Great. I'll take a look at that. What are we looking at? CCJ. So let's take a look at CCJ. 20 years ago, we're at 3 cents. Then we go to 3.4, 3.6, 4.7, 5, 6, 5.9. It went backwards. 4.9 backwards again. 4.7 backwards again. 6, 5.2 backwards again. 5.5, 5.7, 6.8, 6.7 backwards again. 6.8, 7, 10, 10, 9 backwards, 9, 10, 9 backwards again. 10, 9, 9, 9, 9, 9, 9, 9, 8. It's not going up. It's just staying where it is. It's not increasing. Okay, 9, 8.6, 8, 8.1, 7.5, 7.2, 7.6, 7.6, 7.5, 8, 6. Yeah, no. There's no increase there whatsoever. It basically stayed the same. Terribly sorry. CCJ, not consistently profitable. Now, consistency profitable, it's like teaching a child how to count. 1, 2, 3, 4, 5, 6, 7. The numbers get higher and higher and higher. CCJ, it goes 3, 3.5, 3, 4, 3.2, 3.1, 2, 7, 7. And then it goes backwards. Up, down, up, backwards. Yeah, no. I'm terribly sorry, Roscoe. I like consistency of profitability. Oh, who got UAL? I did 100 shares and 1 call today on UAL. Ooh, Lloyd, let's take a look at it. Because so far, everything I'm looking at looks like less than desirable. UAL, United Airlines. All right, now, first thing I want to do anytime I look at a stock is look at the 1-year chart. Now, it takes me 3 to 4 seconds to basically look at a chart and say whether or not it's something I like. So I'm looking for 5 things. And you should be able to see those like that. You ready? Here we go. See how long it takes you to see these. High. 1. Number 2. Low. Number 3. Where was it? Number 4. Where is it? And number 5. Down, up, down, up. That's it. 3 to 4 seconds. That should all it ever take. High, low, is, down, up, down, up. That's it. That's all I'm looking for when I first look at this. Because I don't want it at the high of the year, because I never, ever, ever buy at the high of the year. The only thing the high of the year tells me is, hey, keep the eye on this thing for when it pulls back, then I want to jump in. I don't like the low of the year, but the low of the year tells me keep my eye on it because it's going to find a bottom soon and then turn around. Well, right now, it's between the high and it's between the lows right here. Fine. Which direction is it going? Up. Now it's coming back down a little bit. All right. That's step 1. Take a look at the chart. Wait a second. Sorry. Back up for a second. Step 1 is finding a good set of companies. Okay. There's over 10,000 different stocks you can choose from. So pick the ones you like. If you got a pencil and paper, you might get ready for this one. Okay. Ones that I like. Dividend Kings. Those are companies that have consistently increased their profits for at least 5 decades. Stock market has been around for 400 years. Very first dividend stock ever sold was in 1602. The VOC, the Dutch East India Shipping Company. Look it up. VOC, very first dividend stock company. They went door to door. Hello, have I got a deal for you? You invest in our company, we will share our profits with you. We will divide up the profits, divvy up the profits, and give you your share. You invest in our company, we'll give you a share of the profit. That was the promise made in 1602. Okay, so ever since then, companies say, hey, invest your money with me and I'll give you a share of the profits. Well, the VOC ran for 198 years and they averaged 18% per year. Look it up. It's historical facts. I love facts. I really do. So anyway, there's over 10,000 different companies. So what I like, Dividend Kings, 5 decades of increased profits. Dividend Aristocrats, 25 years. That's a quarter of a century of increased profits. Dividend Champions, 25 years of increased profits. What's the difference? The aristocrats are a little bit more snobby. I mean, just think of it. Aristocrats are champions. We are the champions. They are the aristocrats. Yeah, well, the aristocrats is a little bit more picky on making that list. But anyway, the dividend contenders, okay? 10 to 24 years of increased profits. Now, those 4 lists I just gave you of over 300 companies. Now, you can invest in anything you want, but for me, I only want to put my money in something that has a proven track record. Now, for those of you that have not reached retirement yet, more than 10 or 15 years away, well, you can take risks. CCJ, MSTY, YBTC, all that other weird stuff. But for me, terribly sorry, I'm telling you this up front so you know you're not wasting your time here. If you're looking for me to tell you, hey, this stock is going to shoot to the moon and you can retire in 3 weeks, no, you're in the wrong place. What I'm looking for is 1% a week. So if I buy a stock for $100, well, I'm going to sell it for 101 by the end of the week and move on to the next one. Okay, I have no monogamy whatsoever in the stocks that I pick. I've got about 300, you like that? I got about 300 that I look at. Now, I don't look at them all at once. Okay, when I say pick a list, all right, find a list of stocks that you like. Stick them in a calendar. Behind me is an EX dividend calendar. All these little green dots, they represent companies getting ready to pay a dividend. Now, the dividend is a portion of their profits. So if the company is run properly, okay, effectively, efficiently, well-run, oiled machine, well, their profits increase every single year. Now, all these stocks right here have 25 years or more of increased profits. Now, this is just the month of July. The month of August looks different. The month of September looks different. Okay, so there's 4 quarters. Okay, first quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, which we are in now, July, August, September. Fourth quarter, October, November, December. The funny thing about the 4 quarters, they all have 13 weeks. There's 13 weeks in each individual quarter. 13, 1 through 13. Now, the fun thing is, ooh, check that out. Creative J, woohoo, thank you. So the fun thing about that, the first week, July, is the first week of the third quarter. Now, the first week of the third quarter looks very similar to the first week of the first quarter. And it looks almost identical to the first week of the second quarter and the first week of the fourth quarter. So the first week of every single quarter has APD, Cardinal Health, this one, that one, that one, that one, that. All of them, they're all the same every 90 days. That's where I got that book from. How to get a check, wait a minute. How to receive 10 to 20 checks per month like clockwork. Well, if General Dynamics pays a dividend on the first week of the quarter, well, great, I'll invest in that, grab the dividend, and then I'll get rid of it, and I'll jump into McKesson. I'll grab that dividend, I'll get rid of that one, I'll jump into Hormel, Colgate-Palmolive, Procter & Gamble, Lowe's, Caterpillar, Fastenal, or West, or yeah, whatever. It's not that difficult. Okay, so step 1, find a good bunch of stocks. Put them into the calendar. The calendar tells you when to buy them. Because a dividend stock has a tendency to increase in value just before the dividend is paid. But after the dividend is paid, they have a tendency to go down. See, stocks are very, most of them, some of the ones, at least the ones that I like, are very predictable. They do the same thing over and over again. Just before they get ready to pay the dividend, they go up. After they pay the dividend, they usually go down. Usually. Not always. Oh, ooh. I got 2 drinks, one cold, one warm. One soothes the throat, and one quenches the thirst. Weird. Anyway, so step number 1, find a bunch of stocks. Step number 2, throw them into the calendar. Step number 3, check out the chart. High, low, was, is. What's the direction? Great. Now let's check out the numbers. The numbers, what am I buying it for? 86.38. Great. What's the closest strike price to 8.38? Now, for those you who don't know what I mean by strike price, we don't want to look at that one because tomorrow's Wednesday. The closest strike price. Now, when I say I'm looking for a simple, safe, predictable, consistent 1% per week, well, I'm using a strategy that is safe. It is safe, so safe they say you can do it in your IRA. Approved by the government, you can see lots of profits for you and me. That's horrible. Right off the top of my head, that's horrible. But anyway, a covered call is one of the safest trading strategies. Is you buy the stock, you sell it to someone else for almost the same price you just paid for it. So what am I collecting? Where's my profits? Well, let me explain briefly how a covered call works. Let's say hypothetically you have a car that you're not using. Bring it out in the front lawn, slap a for sale sign on it. You own the car, you can do whatever you want with it. You put a for sale sign on it, let's say Chuck down the street comes by and says, hey, I like your car. Let me give you $1,000, hold it for me until Friday. If I come back on Friday, I'll give you the money for the car. If not, you keep that money and then sell it to someone else next week. That's kind of cool. So if Chuck comes back by Friday, he gives you the money for the car. So you made that money plus whatever he gave you is a non-refundable deposit. So if he doesn't come back, well, you take that non-refundable deposit, you take it, stick it in your pocket, and then you sell the car to someone else the following Monday. Because when I said simple, safe, predictable, here's the next one, consistent. You remember consistent? Look at this. 18 July, that's this Friday. 25 July, that's next Friday. August 1st, 2 Fridays away, 3 Fridays away, 4 Fridays away, 5 Fridays. Every single week, there's an opportunity to make some cash flow. So here's another way of looking at it. Let's say, hypothetically, I'm looking at it in this manner. A cash producing asset. Wait a second. A weekly cash producing asset. Now, a lot of you will probably know someone who has rental property, a house, an apartment, a condo, whatever, something that they rent out on a weekly or monthly basis. Great. House next door is going for $500,000. Great. I buy it. I get $5,000 a month. Well, at the end of the year, I have what's called a rate of return. How much money did I put into the house? $500,000. What is my rate of return? It is whatever it is. Well, here it's basically the same thing. However, just a smidge different because I don't have to pay it $500,000. Okay, so UAL, if I wanted to buy 100 shares, it's $8,600. Well, it's a big difference than 500,000. How many shares can I buy at 500,000? Probably a lot. But here's the difference: is this 86.68? If I buy one contract or 100 shares, that 100 shares is a cash. A weekly cash producing asset. Okay, so I buy 100 shares, great. What am I bringing in? $4.15 per share. Now, $4.15 per share on one contract is $415. So what am I paying? I'm paying $86.68. Well, 100 shares is going to be $8,600, $8,600, whatever. But what am I collecting on a weekly basis? Well, for this week, because every week it changes. So 415 per contract. So one contract 415, 2 contracts 830, 3 contracts, what is it, 1290, something like that. Okay, but that's how. Here's another way of looking at it. Let's think of it as Pepsi or Coca-Cola. Let's say it's a Pepsi machine. You buy a Pepsi machine. What is Pepsi going for nowadays? PEP 131. Okay, 131.81. No, 133.81. So let's say, hypothetically speaking, 100 shares is $13,000. Well, what is that giving me this week? Well, this week, 134. The 134s are going for 305. That's $305 per contract. So let's say hypothetically you take your Pepsi machine and you put it in the fairgrounds because they're having this big huge carnival coming up this weekend. Great. Well, this week I'm making $360 per contract per Pepsi machine. So if I buy 2 of them, well, now I'm getting 360 times 2. That's 420. Wait a minute, no, 720. Okay, so for each 13,000, I'm getting 360. Next week, well, let's say you take that Pepsi machine and you bring it to the beach. Well, how much am I making next week? Well, next week, here we go, August 1st. August 1st, 134. The 134 is going for 350. Okay, so this week I make 305. Next week I make 350. Hypothetically speaking, all these numbers change. Every day, actually every couple of seconds, these numbers change. So when the market is open from 9:30 a.m. until 4 p.m., every single number here on this side will change. But the math doesn't change. What am I buying it for? What's the closest strike price? What is it selling for? That's what I'm bringing in. So I'm buying it at 133.81. I'll be selling the 134s, collecting 305. That's more than 1%. That's what I'm looking for. I honestly don't care if the stock goes up or not, because once I own 100 shares, I have what is called a weekly producing asset. It just so happens this week the value of it is 133.81. Next week it'll be worth something different. Let's take a look at this. The high of the year was 180. The low of the year is 125. So whether I bought it at 180 or 125, I still own one weekly cash producing asset. 100 shares equals one weekly producing asset. So this week, it's giving me this amount here. If I do it for 2 weeks, it's giving me this amount. And then next week, the numbers are going to change. It'll be different. It's kind of like taking your Pepsi machine, putting it in a rest area on Highway 95. Well, there's a lot of traffic on Highway 95. Well, let's say you take it and you put it on Route 139. There's hardly any traffic at all on Route 139. So every week, it's going to change. But here's the thing. Are you okay with owning Pepsi? It's a Pepsi machine. Think about it. You get a cash flow from it every single week. It's going to go up. It's going to go down. It's going to go up. But here's the thing. You never lose until you agree to sell it for less than what you paid for it. So if I buy it tomorrow at 133.81, there's no way on God's green earth do I ever plan on selling it for less. As a matter of fact, I have 5 simple rules. Rule number 1 is never buy something. Hold on, Tiger. I'm going to answer that in a second. Never buy something that's not on the list. If it's not on your list, don't buy it. So for my 9-year-old daughter, it was Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. And for the fun of it, we threw in Warren Buffett's list. Because we all know Warren Buffett's the man. Okay, so if it's good enough for Warren, it's good enough for me. It's good enough for my 9-year-old. So those are the only stocks we looked at. And it was only about 300 of them. So that being said, if it's not on the list, don't buy it. Rule number 2, this is a big one. But people always ask me about it. Always. Never sell at a loss. What happens if the stock goes down? Big deal. You buy a car, you drive it off the lot, it just went down in value. 5 years later, that car is worth less. Okay? You take a look at the real estate market. The real estate market's high today. Well, next week it might be lower. It's the exact same thing. It is a cash producing asset. It depends on how you look at it. If I look at it, I'm buying a Pepsi machine, 13 grand. Great. I'm going to put it here at the fair. A lot of people coming. I'm making a lot of money. Great. I'm making 305. Great. Next week, well, it's raining all week long. I didn't make that much, man. I only made 175. Boo-hoo. It's cash flow coming in. It happens. Terribly sorry. You own a rental piece of property, someone's going to damage your house, and you have to pay for it. That's money coming out of your pocket. Oh, what happens if you can't rent it out? That's money coming out of your pocket. The company consistently increases their profits every single year. So every 90 days, I'm getting a profit. I'm getting a profit from the company. But I'm selling a covered call, giving someone the opportunity that they can buy my little Pepsi machine from me for more than I paid for it. Now, if I'm paying $133.81, I want to sell it for $134. So I got 5 questions. Number 1, does it make sense? Number 2, do I like Pepsi? Number 3, do I like Pepsi at this current price? Number 4, am I ready to make the commitment to myself to write a covered call every single week until it hits my target? What's my target? My target's 134. Where is it at right now? 133.81. Well, it could hit 134 this week. It could hit it next week. But here's the interesting thing. If it comes up to 134, well, I have the opportunity to take that option and roll it into next week. Well, that's an awesome trade. That's an awesome strategy. I didn't know that 2 years ago. 2 years ago, I took a huge loss because I didn't know I could roll it forward. Now, I've been trading let me say, since the late 1990s. I've been trading since the 1990s when it was $250 commission to trade. I was so excited when they dropped it down to 125. Woohoo! They cut the commission in half. Well, nowadays it's like 65 cents to make a trade. It's like, you gotta be kidding me. Anyway, besides the point, I have no intention whatsoever to sell it for less than I paid for it. If it goes up, great. I can roll my option into next week to get a little bit more money. And then as it gets a little higher, I can roll it again. Gets a little bit higher, I can keep rolling it until it stops paying. Because at some point, if I'm buying it down here at 130 and it goes up here to 150, rolling it into the next week, I'm not getting 1% anymore. So it's time to let it go. See you later. Let me buy a Coke machine now, or Snapple, or Fanta, don't you want a Fanta? Anyway. Keep rolling, brother. Absolutely. Elsa, how are you doing this evening? Jane, are you talking about dividend payouts only? No, I'm talking about stock options and dividend stocks, specifically dividend stocks that are consistently profitable. M. Woodhouse, yeah, at 25, I had $65 broker commissions. I needed $5,000 to invest in the stock just to make the commission worth it. Yeah, I hear you. At $65 a share, yeah, tried $250 commission. That was painful. I'm in Paraguay. Love American stocks. Elsa, cool beans, Paraguay. Never been there. Here we go. All right, so let's check on some of the questions that I may have missed because once I start rambling, it's just like runaway train. So what do we have here? Okay, here we go. On football hike, got that one. QQQ, I already did that one. Already did that one. Already did that one. Already did that one. QQQI. VYM. Right. VYM. Why the hell would you want to do VYM? Let's check it out. VYM. Now, don't get me wrong, because VYM is good for some people. Not for me. Now, Ryan, let me explain to you why I don't like VYM. Okay? Do you see this right here? 18 July, 15 August, 19 September, 17 October, 16 January. That is what is called monthly options. Now, the difference between a monthly option and a weekly option, well, monthly, you can only do it once a month, 12 times a year. Weekly, 52 times a year. So, all right. Whoops, what the hell just went on? Uh-oh. Something just went wrong. Something went wrong. Resume, there we go. Gonna resume that one. Sorry about that, guys. My brother called. All right, here we go. I didn't go all the way back here. I forget where I was. All right, 1% is a stock, or is that stocks or options? DT Consultants. The 1% is usually the premium on the stock options. So whether I have stock appreciation, whether I have stock option premium, okay, it doesn't really matter to me as long as it's 1% every single week. If I have 100,000 in my account, I want $1,000 a week. If I get 50,000 in my account, I want $500 a week. Whatever it is, however I get there. Some I'm going to make 1%, some I'm going to make 2 or 3, some I might make a half. But my goal is a consistent 1% per week. What happens when those options expire? See, the interesting thing, Tiger, when an option expires, doesn't mean anything. So if I buy the stock, VYM, okay, I sell somebody the rights to buy it from me using a stock option. Well, that stock option has a beginning date and an ending date. Now, from the beginning date to the ending date, whoever bought that option, they can do whatever they want. They can exercise it, they cannot exercise it. If they exercise it, great, they take the stock away from me at the agreed price. Okay, it's a stock option. You're buying a stock at a certain price by a certain date. See, monthlies, I don't do monthlies because you can only do it once a month. which means I can only make 12 to 24% a year. Some people like 12 to 24% a year. Me, I want 50 to 100% a year, so I got to do weekly options. Now, if I did monthly options, I'd be like a lot of you, back at work, punching a time clock. No, thank you. See, I have enough of my money. I have enough money to live comfortably at 1% a week. Now, if it was 1% a month, I'd have to be back at work, because 1% of my income on a monthly basis is not enough. 1% of my assets on a monthly basis is not enough for me to live comfortably. I have to make 1% every single week to live comfortably. That's why I did it. Can you explain what happens on SPY today? No, I don't look at SPY. Sorry, Sam. I'd love to be able to help you out, but here's the thing. Einstein was once asked, how many feet in a mile? So he said, my dear boy, why would I bother cluttering up my mind on something that can easily be looked up? It can be looked up, easily written down, because it's written down somewhere. So what happened with SPY today? It's written down somewhere, but it absolutely means nothing to me. I don't look at it. It has nothing to do with me. So I don't pay attention to it. I pay attention to what's my goal. My goal is 1% with companies that are consistently profitable. If you take a look at SPY, as a matter of fact, let's go take a look at it. And I'll tell you why I don't like SPY. Okay, here's right here. SPY. Okay, let's go back all the way to 2005. 2005, because that will be 20 years ago. Remember, 2 decades, 20 years. So let's take a look. May 18th, 2005. 46, 48, 52, 67. Looks good so far. 51. That went backwards. That's 1. 55, 57, 79, 55. That's backwards twice. 51. 65, 71, 77, 64. That's 3 times. 66, 69, 71, 56. 4 times. 51. 5 times. 50. 6 times. Do you see what's happening here? SPY is not consistently profitable, so I don't look at it. It's actually that simple. Why would I look at something that doesn't perform the way I want it to? It's not that difficult. The Dividend Kings, 5 decades of increased profitability. If they're consistently profitable every single year, why would I look at anything that goes up, down, up, down, up, down, 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 up, down, 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 up, down? No. That's not consistently profitable. I do not look at SPY because it doesn't do what I'm looking for. So are you selling a particular delta option? Tiger Twin, let me ask you a question. Okay. My assumption is you don't have children in the 8, 9, 10 area, because I don't either. My daughter's now 26. She's going to be 27 this year. Holy shit. Thanks for making me feel older. So when I taught my daughter, simple, safe, predictable. Hey, thanks, Roscoe. Simple, safe, predictable, consistent, and no way for her to lose. So now you want me to teach her about Delta. Well, what about Vega? What about Theta? What about Rho? How about we teach her the Black-Scholes option pricing methodology? Why not? Oh, what about the IR side index? The Fibonacci retracements? No. 9-year-olds don't want to understand all that. It had to be simple. It had to be safe. It had to be quick. Okay, so do I explain that to my 9-year-old? No. Stocks go up, stocks go down. Is it going up? Is it going down? It's really not that difficult. It's only adults that want to make it more complicated. Is it going up? Great, buy it. Is it going up? Well, how many percentage is it going to go up before I want to get out? Pick a strategy where you can't lose. Well, a covered call is great. I buy the stock, I own the stock. The company is consistently profitable, so their profits that they give me every year increase over and over and over again. So if I'm buying Procter & Gamble, they have 5 decades. That's 50 years. 5 decades of increased profits. Well, why would I care about the delta if the company is consistently profitable? Now, if I jump in, they give me 1% this week, great. Why do I care about the delta? Now, I understand what the delta is, and I understand why it could be important to make you feel better about the position you get in. But I have simple rules. Rule number 1, never buy something not on the list. So I'm only looking at 300 companies, and each one of those companies is consistently profitable. All right. But thank you for that, Tiger. That's very nice of you. Love you so much. One-time gift. Okay, cool beans. I do. All right. Roses are red. Purple iris. How are you today? Are you selling a particular delta opportunity? No, I'm not. All right, so let's take a look at some more questions. For covered calls, don't you need to own 100 shares of that company? Absolutely, James. Hey, Kevo, is Verizon at the bottom? Let's take a look. Now, we've been looking at Verizon for a while because we thought as soon as we find the bottom, we can jump on in. Now, remember, we looked at this yesterday, and we thought yesterday was a bottom. Nope. Today's even lower. So guess what? We're going to look at Verizon again tomorrow because I want to find out where is the bottom on Verizon. I love Verizon. I do. It's a great company. It's been around a long time. They are consistently profitable. They got a whole boatload of customers paying them every single month. Why not buy Verizon? Well, I'll tell you why not. Because right now, they're dropping in price. Why buy it here at 41.26 when tomorrow it might be 39 or 38? Just wait. Stock market's been around for 400 years. It ain't going anywhere. Don't be in such a hurry to throw your money away. Wait until it finds a good price. So as it keeps going down, 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 wait till it finds the bottom. Look at here, a couple of weeks ago. Down, 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 down. There's the bottom there. Turned around, went back up. Great. You buy here, sell here. When it drops down, once it gets to the bottom, turns around, buy there. As it goes back up, sell. Okay, stocks go up, stocks go down. Look, down, up, down, up, down, up, down. Where do you think it's going to go next? As soon as it finds the bottom, it will turn on, go up. So, unfortunately, Kevo, haven't gotten there yet, but we'll keep our eye on it. Roses are red. Pink Panther, I bought a dividend stock and then it went down. Story of my life. Okay, so Pink Panther, that's what they do. Stocks do 3 things and 3 things only. 1, they go up. 2, they go down. 3, they go nowhere. Okay, that's called a doji, where it opens up one price and it closes at the exact same price. Called a doji. It goes up, down, just stays the exact same place. Is Lockheed Martin on? Yes, Lockheed Martin is on my list. Havel. Seri wants to take a look at Energy Transfer. Now, I don't trade Energy Transfer anymore. I used to years ago. But the reason why I don't, take a look at this. Okay, right now it's at 17.59. So the 17.50s are going for 28 cents. Well, great. That's more than 1%. But one strikeout, you're getting 8 cents. Then you're getting 2, and then you're getting 1, and then you're getting almost nothing. So the premiums here, they decrease so rapidly, it's not really worth it. Take a look at Dell. Let's look at these premiums. Okay, right now it's at 125.69. The 126 is going 247. Well, that's nice. But look at the next one. 209, 172, 137. Those are great numbers. Now, it's a little bit different price, but the premiums are better. Energy Transfer and a few other ones do that. They have great at the money, but once you're 1 or 2 strikes out, it's not worth it. So why do a stock where it's very uncomfortable on the premiums if you're wrong? Because stocks go up and then they go down. So Pink Panther, you're going to buy a stock and it is going to go up. And then it will go down. And then it will go up. And then it'll go down. And then, hold on a second, it'll go up. Wait a minute, it might change its mind and go down again. That's all they do. They go up, they go down. They do not come to your house and take your dog out for a walk. They do not come to your house, make the bed with those little hospital corners and put little candies on the pillows and tuck you in at night. No, stocks go up, stocks go down. If you're expecting a stock to do anything other than go up or down, you're in the wrong game. Okay, Havel, QDTE. What the hell is QDTE? QDTE. Yeah, hell no. I don't do, didn't I just say a little while ago, I don't do monthlies? Okay? 18 July, 15 August, 19 September, 19 December. No. Sorry. Lockheed Martin, LMT. High, low, was, is. Look at the motion. Up, down, sideways, 470. The 470 is going for 1220. That's a nice premium. Okay? So hold that thought. Oh, imagine this. I'm actually talking to myself. Hi, James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest. Okay, why am I talking to myself? That's weird. I'm looking at this and I'm answering myself. Okay, I don't know who the hell did that one, but alrighty then. Okay, Theo, you left off talking about the difference between weekly and monthly. Yeah, Theo, weekly options, if I'm getting 1% to 2% every option trade, okay, weekly, that's 50 to 100% per year. Monthly is only 12 to 24% a year. Now, some of you may be okay with 24% a year. There's nothing wrong with that. I mean, there is no right or wrong way to invest. Okay, I invest in a very, very interesting way. There are other people just like me online somewhere doing this exact same thing, teaching their strategy. And for them, it works. And there's nothing wrong with that. Well, I'm retired. I found something that works for me. Great, that's what I'm going to do. I've been doing it for over 15 years, and it's been working just fine. Simple, safe, predictable, consistent, 1% per week for less than 10 minutes a day. Every video you'll hear me say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. I don't want to be sitting in front of my computer all day. 10 to 15 minutes, that's it. I have better ways of spending my money and my time. I have better ways of spending my time. I would prefer, I have a big fish tank, I do. I would prefer to sit and just watch the fish for hours. Watch them swim around. What's the point? No point at all. But it's my time. I'd rather sit and watch the grass grow than sit in front of this thing making money. Terribly sorry, but I ain't taking the money with me when I go. Sorry, I want peace, quiet, and serenity. My fish tanks, give it to me. I watch my fish. It's very peaceful, very relaxing. Watching the grass grow, very relaxing. I get bird feeders in the yard, and I get bird houses in the yard. So I make bird houses in my part-time. So I make a couple bird houses, hang them up. Watch the birds go in and out. Peaceful, relaxing. All right. Anyway, try LEG. It's a dividend king. Leggett and Platt. Yes, it is, Roscoe. Oh, wait a second. We're still looking at Lockheed Martin. Okay. High, low, was, is. Up, down, sideways. It's at 470. The 470 is looking, paying nicely. So let's take a closer look at it. Okay, a year ago, we're at 466. The high of the year was back in October of last year, 621. And then the bottom of the year, I wonder how many people know this. The bottom of the year was in the second week of April, TDS Day. Okay, who knows what TDS Day is? Here's the bottom right there, bottom of the year. Up, down, up, down, up, down, up, down, up, down, up. See, it's going up right now. Okay, let's zoom in closer and look at the last 30 days. Because see, the last 30 days gives me a better idea of where do I think it's going next. And that's very important. Because where do I think it's going next? So 30 days ago, look at this top. This is what you call resistance. 1, 2, 3, 4. 4 times it tried to go over 482. And it just couldn't go. If it was worth more than 482, it would have went higher. But no, 1, 2, 3, 4. 4 times it wouldn't do it. So there's the high. Here's the bottom. Now she's going back up. So the bottom is 352. Now we're at 475. That's a $25 increase. That's a nice profit. So today we have a lower high and a higher bottom. But she closed lower today than she closed yesterday. So could today be the beginning of profit taking where she comes down? I don't know, but it looks like it could be. Could be. Now, do I want to jump in there? Not necessarily so, because see, she went up here, she pulled back, here's a new bottom. 2 days to the upside, 1, 2. Third day I like to jump in, didn't do it today. So no, I wouldn't jump in today. So I have a certain set of rules. And if you go to YouTube, you'll see that I have over 1,100 videos over the last 15 years doing the exact same thing. So I look at it and I'm thinking 2 days to the upside from a bottom. Okay, here's a bottom. She shot up, she pulled back. Here's a new bottom. 1 day, 2 day. On the third day, if it's higher on the third day, I will jump in. It didn't do it. So no to Lockheed Martin for this week. LEG, Leggett and Platt. LEG, Leggett and Platt. Interesting, but it's going to be a no. Now, don't get me wrong. Leggett and Platt, LEG, is a dividend king. They have been around for a while, and they have 5 decades of increased profits. However, I don't do monthly options. The numbers and the money, just not worth it. Oh, look at this. I'm on Instagram talking to myself. Oh, if you guys can do me a favor, Instagram just changed their rules. If I don't have 1,000 followers on Instagram, I'm not allowed to do live broadcasting on Instagram. If you could just go over there, just follow it. It might make my life a little easier. Don't ask me why. Instagram, I don't really get much traction out of Instagram. But I think it's fair to broadcast and give them at least the opportunity. Okay. Tiger Win, love you so much. First time, okay, get that one. Follow, blah, blah, blah. I do. Okay, got it, good. All right, Theo. All right, Theo, we got that one. Roscoe, we did that one. Okay, some more questions. Ooh, what do we have over here? Okay, back. What are we missing? What are we missing? Leggett and Platt, we already did that one. PK, love Theta on weeklies. Ooh, I do too. You already charted Coca-Cola. Now, Dice the Great, Coca-Cola, I can count on one hand the amount of times I've bought Coca-Cola over the last 20 years. Not Coca-Cola, the soft drink, which you drink. I'm talking Coca-Cola, the stock. Well, look at it. It's a dividend king. It's been around for over 100 years. They're currently, okay, high, low. Where was it? Where is it? Look at this. Up, down, up, down. Now we're here at 69.36. The closest one is 69.36 is going to be the 69. That's going for 142. The 70 is going for 71. Well, great. Both of those look good. All right. So let's check back to the chart and see if it's the right time to buy. So a year ago, Coca-Cola was at 63.65. Now it jumped up to 73, drops down to the bottom of the year in January at 60.58. Well, look at this menagerie. Okay, we have TDS day right here, which is your 90-day bottom, shoots up to a little over 74, comes down, back up, back down, back up, back down. So it's in a downward trend at the moment. Well, that is good and it's bad. Well, let's zoom in a little bit closer. Here's your last 30 days. 30 days, we're at 71.50. We drop down to below 69, shoot up to 72. Great. Well, here's a new bottom right here. Look closely. You ready? The new bottom was here. Wednesday. Thursday was higher. Friday was higher. That's 2 days to the upside. So Monday, I should jump in if it's higher. But no, Monday, she pulled back a little bit. So this is why I like 2 days to the upside, and on the third day, I will jump in if it is higher. So Wednesday was the low, Thursday was higher, Friday was higher. I was looking at it on Monday. Monday came, and it was a bust. It actually pulled back a little bit. And then today, down a little bit more. So as soon as I find a bottom, I want 2 days to the upside, and then on the third day, I want to jump in. That's how I pick the bottoms. You guys got to figure out what works for you. Because like I said earlier, we are all different and we all do have different strategies and have different goals. Okay, mine, simple, safe, predictable, consistent, 1% per week. Roscoe, Verizon was IrTouch Cellular. Okay, thank you. Thoughts on Rocket Lab? Rocket Lab's not been around for 20 years. Don't even want to bother. Okay. Do you like selling puts to enter the position? So PK, you're talking about doing the wheel strategy. No. Some people like doing cash secured puts before they jump in. There's nothing wrong with it. But here's the thing. A cash secured put is almost the exact same as a covered call. You're taking a big chunk of money, you're putting it aside, and you're getting a rate of return. Great. Well, when you do that, what rate of return are you getting? Now, is the stock moving up or is the stock moving down? Okay, so a lot of things come into play anytime you jump in. Where's the stock at? What direction is it going? What do the numbers look like? What am I buying it for? In your case, what strike price am I selling on a cash secured put? What does it look like? Where does it look like it's going? There's a lot of moving parts, and it's really not that difficult, because to look at a chart, down, up, down, okay? Down, up, down, it's not that difficult to see. Remember, it was created for a 9-year-old. Simple, safe, predictable, consistent. So what else do we got? All right, we already looked at Verizon. Mindy, did you already look at Ford? I'm late. No, Mindy, we haven't looked at Ford. Let's take a look at it today. Now, 3 years ago, Ford was my #1 producing stock. Now, look at this. We've been following this thing for weeks also, because we were following this and says this thing's got to turn around sooner or later. But it looks like it's finally turned around. High, low, where was it? Where is it? Look at the motion. Down, sideways, and then up. That's it. Okay? Simple, right? What's it going for right now? 11.57. The closest strike price is going to be 11.50. Well, the 11.50 is going for 27 cents. That's more than 2%. Let's do one. Let's check it out. Okay? A year ago, gonna need the glasses for this one. A year ago was the high of the year, 1488. Well, look at the bottom of the year, TDS day. That's some funny shit. TDS day right there, 855. Come on, I know kids in high school can afford $8.55 for a share of Ford Motor Company. The company's been in business for over 100 years. Well, here's the bottom. Shoots up, pulls back, shoots up, pulls back, shoots up, it's pulling back down. Okay, so would I buy it now? No. Look at the last 30 days. Here's your last 30 days. 30-day bottom, 30-day top. Now she's coming down. Great. I'll put Ford down for 2 weeks. And I'll look at Ford again in 2 weeks. Because it's a no for today. But 2 weeks from today, more than likely, if it continues with the up, down scenario, it should be back down around the high 10 area, usually. Uh-oh, Drizzle, woohoo, thanks, Drizzle. RITM, what the hell is that? RITM. Hell no, I don't do monthlies, I already said it. Will, you got that? I don't do monthlies. Okay, monthlies do not pay me enough money. So no, I don't do them. 62 and tired. I can't wait till I'm 62, because at 62, I get to collect Social Security and be disappointed. Think about it. I've seen a look what they're going to give me at Social Security. I'm thinking to myself, wow, okay, I could pay my phone bill, maybe my electric bill. Other than that, I'm SOL. So no to RITM. Microsoft. MSFT. Microsoft. Hell no. I don't buy at the high of the year. Don't get me wrong, love Microsoft. Now, I will look at Microsoft in 2 or 3 weeks when she pulls back down. But not now. Drezig, what's happening? Wavelength, good evening, good evening. Microsoft, I'm going to put that down for 3 weeks from today. Three weeks from today. Misty for dividends. Okay, user 246298. I'm going to call you Chuck. So, Chuck, we looked at Misty earlier today. Now, you might like Misty. It's only like a year and a half old. I don't do companies. I don't hand the keys to my Lamborghini to a 1.5-year-old. No, I'm not putting my money into a company that's a year and a half old. Sorry. Good evening. Always great content. Thank you, Dressig. Cool beans, cool beans. All right, so what else do we got? Mark, good evening. Mental wellness vibes, good evening. Felix, hey, James, on TikTok, you did not mirror the screen. I didn't? Oh, no, I didn't. Sorry about that. Let's do this. Here we go. Sorry about that. Here we go. Oh, back over. Here we go. All right, where was I? Thank you, Felix. Kalsaka. Kalsaka. Interesting name. Smith, good evening. Vance. What's happening, Vance? Will, good evening. Nettie, good evening, Nettie. Joey, good evening, Joey. PK, Red Sea, good evening. Love it, good evening. Nettie, 1% a week on how many stocks? I have 7 different accounts, Nettie. Okay, so I share 3 of them publicly. Okay, I got no problem whatsoever sharing my account. Where the hell is it? Let's go. Down. Nope, not there. Let's open it up again right here. I was actually working on it today, uploading the numbers. I hate doing numbers. I really do. So here it is, the 10-minute-trader. Simple, safe, predictable, 1% per week. Live nightly training, 9 Eastern Standard Time. Well, isn't that what we're doing right now? Okay, come down a little bit more. Ooh, check this out. About us. If you're looking to strike it rich overnight, this ain't it. It says it right there. My main focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. The video gives you a rough idea of what we're doing. Okay, so what we're looking for here is right there. All right, so I have 7 different accounts. I share 3 of them publicly, okay? Account 1, account 2, account 3. If you come back and you take a look, I share each and every single trade that I do. Here's the timestamps over here. This is what kind of a trade it was, the buy, sell, the quantity, what stock it was, what the strike prices were, and what the credit was, or the debit. So I share all my trades, the winners and the losers. Okay, yeah, I do lose once in a while. Okay, I think we're in what? We're in July, which I believe is week number 29 for the year. Week 3 for the quarter, because we're in quarter 3. We're in quarter 3, week 3, quarter 3. Tomorrow, interesting, this is funny, ready? Tomorrow is day 3, week 3, quarter 3. Third quarter, third week, third day. Tomorrow, Wednesday. All right, anyway. So every single week you will see I have all my trades posted. Okay? Hertz, Merck, Advanced Auto Parts, Hertz, Kohl's, Merck, Foot Locker, Advanced Auto Parts, Hertz, MPW. And here's what the profits are. Profit, 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 profit. Oh, debit, profit, 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 profit. Okay, so yeah, week 29, I think I have 4 losses this year. That's not bad, because if you look, I got 7 accounts. This is what 3 of them look like. So can you imagine the other 4? All right, we don't need to see that. Let's get out of there. Back to where we are. So yeah, I do share all my trades online, my winners and my losers. Oh, Drizzle wants to take a look at Intel. I love Intel, and I actually own some Intel, INTC. Interesting. High, low. Where was it? Where is it? Look at this. Down, sideways, then up. Okay. We're at 22.92. So the closest strike price to 22.92, come on, you all know it. 22.92. What's the next whole number? 23. Right? I can't believe you guys didn't get that one. 23. Look at the last 30 days. What do you think? 30 days ago was a 30-day bottom. Shot up, pulled back. 1 day, 2 days, 3 days to the upside. Here you go. Now it's pulled back again. Okay. Do you like it? Yeah, I own some. I forget where I even bought it at, but I own it. I roll it every week, and I get more than 1% every week. Because look where it's at right now. 22.92. The 23s are going for 103. The $23 stock, the premium is 103. That's over 4% for the week. But then you have to ask that huge question. Do I like Intel? Do I like Intel at 22.92? And am I willing to hold it for the rest of my life, or when it hits 23, whichever comes first, and do a covered call every single week and get a premium every single week? Look, this week, next week, week after, week after, week after, week after, week after, so on and so forth, every single week. It's like buying a Coke machine, put it on the side of the road. People come buy a Coke, you get a profit. Well, this is a lot easier because I don't have to go fill that Coke machine, and I don't have to go collect the money. And I don't have to worry about vandalism. I get no overhead. I have no inventory. I have no employees. Dresy, good evening, great content. Ooh, EMR, not now, but maybe a week or two. Mindy, let's check it out. Intel, okay, great. EMR, is that Emerson? Emerson Electric, ooh, 3 weeks maybe. Take a look. High, low, where was it? Where is it? Look at this, down, up, yeah. So eventually, look at this. TDS day, $90. Now we're at 140. So from 90 to 140, that is a $50 increase. Count it yourself. 90, 100 is 10, 110 is 20, 120 is 30, 140 is 40, 150 is 50. It's a $50 increase on a $90 stock. That is more than a 50% increase in how many months? April, May, June, July, 4 months. 50% increase in 4 months. What do you think? Would you take profits? I know I would. I know a whole bunch of people. 50% increase? Yep. Profit taking. Thank you. Move on to the next. Ooh, stop that. I don't want to do that. Okay. You're right, about 3 weeks. Because all that, see, we went up here, a little bit of a pullback here. So it hit like 123, pulled back a little bit, and then kept going up. Yeah, but still, last 30 days right here. What do you think? 30 days ago, we're at 126. Now we hit the 142, and she's pulling back already. Yeah. No, I would not jump in it now, but 3 weeks I might. So let me put EMR for 3 weeks from today. All right, 3 weeks from today. Oh, bad as can. Okay, Merck, MRK. I do own some Merck, just to let you know. And no, I don't know what I bought it at. MRK. All I know is Merck is consistently profitable, so I buy it. I get a nice weekly return every single week. I don't really care what it is. I just don't want to lose any money on it. So as the stock goes up, I make money. As the stock stays the same, I make money. As the stock goes down, I make money. Because I sell a covered call every single week. Do I care where it is? No. I look at what did I buy it for? What option did I sell? What's it at now? What does that mean? How do I protect my nest egg? How do I have consistent profits? So I get 2 goals. Goal number 1, consistency of profitability. That's goal number 1. Goal number 2 is preservation of my capital. Well, it should be the other way around. Preservation of my capital should be number 1. Because, I'm 61. I have no problem going back to work. I just don't want to. Now, it's not that I'm lazy. It's not that I can't. I've been working since 1973. Some of you people haven't even been born then. My first job was Old Man Simmons' farm. Okay, you ever work on a farm before? Especially in the 1970s. We'd work all day long, okay? Sun up to sundown for $5. Think about that. But then again, gas prices back in the 1970s was below 79 cents a gallon. So $5 kind of went a long way. Anyway, Merck, here we go. The high, low, where was it? Where is it? Look at this. Down, sideways, and then up. 81.52, the closest strike price would be the 82. So the 82 is going for 144. Now, 144 is more than 1% of 82. Now, I've always had people say, well, how do you figure out the percentages? And I'm thinking to myself, did they really ask that question? What are they teaching in school nowadays? 1% of 100 is 1. 1% of 82 is 82. $82, 1% of $82 is 82 cents. 1% of 151 is 151. You're just moving the decimal point over 2 places. So if the stock price is $81, okay, 81.52, you move it over 2 places. So it's 0.81. It's that easy. Okay, so if it's $82, okay, the premium is 144. Well, 1% of 82 is 82, but 144 is more than 82, so that's more than 1%. 82 and 82 is 164. Not quite 2%, but pretty darn close. Okay, so that's MRK. Let's take a look at MRK. What are they teaching in school today? Absolutely great question. I think DEI and gender studies. Don't get me started. Seriously. People don't want to hear my opinion on anything. Okay, I'm a Gen Xer. I honestly really don't care about your personal feelings too bad. Okay, I don't give out participation trophies, no gold stickers, no stars, none of that crap. Life is not easy. It wasn't meant to be easy. Okay, all right. Anyway, MRK. So MRK's bottom is somewhere around the $73 area. Okay, now it's going to the upside. Do you like MRK? That's always a good question. Always, always, always. So here's the last 30 days for MRK. 30 days ago was the bottom at 77. She jumped up to 85. Well, from 77 to 85 is an $8 move. Do the math. Math is a wonderful thing, and you probably should have paid attention in math class and left that girl alone behind you. On the one in front of you, on the one beside you. Or that cute little boy, whatever it is, whatever excuse you have. Like, what was his name? I can remember him. Mr. Young. Oh, was it Mr. Young? No, that wasn't Mr. Young. Oh, shit, who was it? I forget who my 7th grade math teacher was. But anyway, he was pretty strict. He always came to school in a suit and a tie. Always looked sharp. But the thing is, pay attention. What is that movement? The 30-day bottom right here, 77. The 30-day top right there, 85. The distance between 77 and 85 is $8. Well, $8 on a $77 stock is more than 10%. So 30 days, the thing jumps up 10%. Yeah, there's going to be people just like me. That guy sitting right next to you, he's going to do the exact same thing. That baby goes up 10%. I'm going to take my profits and go to the next sandbox and play there. Stocks go up, take your profits. Because here's the funny thing about profits. Number one, it ain't a profit until you take it. Number two, nobody ever went broke taking profits. Now, the first one is mine, okay? I came up with that one. It ain't a profit till you take it. That one I came up with. But nobody ever went broke taking profit. That was so awesome. I had to stop everything I was doing and write that sucker down so I didn't forget it. Nobody ever went broke taking profits. Hold will hold for life, yeah. Oh, I like that better than the tea. But the tea, it's good for the vocal cords. Oh, yeah, that's much better. Doesn't quench the thirst, but it's good for the vocal cords. All right, Merck. So she jawed up 3 days to the downside. So I'm going to keep my eye. Now, I already own Merck, so I will keep my eye on it. So when it gets back in again, maybe I'll jump in again. All righty. What else do we have here? Kate Evans, good evening. You're so faking dumb. Interesting name. Drizzle, good evening. ANET. What the heck is ANET? ANET. Arista. Never heard of it. 107. Look at those numbers. Okay, we don't need to see this one. We don't need to see all of that. Just like 6 of them. That works right there. Okay, so ANET. Here we go. Ready? High, low. Where was it? Where is it? Look at the motion. Down, up, down, up. Okay, what's happening here? Look at that movement. Now, I don't buy the 30-day high. It may look good in a couple of weeks, but not this week. The 16th is right there, 30 days ago. She dropped. Here's the bottom. Bottom's 86. She jumps up to 110. That's 10, 20, $24. $24 on an $86 stock. That's more than 25%. Yeah, this baby's getting ready to come down. So I do something similar with covered calls. Bad as can. Cool beans. Me also. Cool beans. Sweet Dan. Yep. Very sad. They don't teach Stats. Yeah. So they can sell them lottery tickets, gambling sites, and poker machines. Okay. You want to hear something funny about lottery tickets? Now, this is a sad situation. It really, really is. Okay. My niece won, I think it was, well, hold on. My niece won $15 million in the scratch-off lottery ticket. Okay? 2.5 years later, she's working a 9-to-5 job. She's broke. Now, her uncle, I've written 14 books on investing. Did she ask me? No. She's broke. Anyway, is what it is. 1% is a joke. Try 30%. Contact me for details. Okay, Prince. 30% a week. That might be nice. Well, I'd like to hear what you got to say, Prince. If you want to, you're putting something up. So let's speak up. Let's hear you. Okay, if you think 1% per week is a joke, try 30% per week. Okay, now I know a lot of trading strategies can get you 30 to 100% a week, but with the extra ROI, higher rate of return, higher risk. So 30% may be great, but what is the risk-reward ratio? And by looking at your picture, you don't look like you're retired. So yeah, you can take risks like that. Me? No, thank you. Because I've seen what 30% a week looks like and what it can or cannot do. Yeah, so no, not for me. But hey, if it works for you, great, awesome. Because it is wonderful. Hell yeah, well said, my man, thank you. 1% is a joke, try 30%, contact me. That's the second time you said that, and you know what? I don't really like doing that. So how do we do this? Here we go. Let's do this. There we go, confirm, there we go. All right, next. Oops, next. Where were we? Why? May, follow, okay. Cloud Tech, a badass cam. You got to give me the ticker symbol because I have no, holy shit, there's only 7-8 minutes left. All right, time to break out the seat, sit down and answer questions. No more stock stuff. EMR, not now, but maybe in a week or two. Mindy, we already looked at that one. Great. All right. I sell cloud. My programmer is in the Philippines. Sweden, cool beans. Right? Good answer. Josiah, thank you for that. Gifter. 5 times saying that. Okay, Drizzle, I'm not quite sure, but alrighty then. Vanek, good evening. All right, so what do we have over here on YouTube? You guys always throw out some good stuff. VO and VGT still at good price points. All right, bad as can. I don't do VO. We've already talked about this. VGT, same thing. I don't do those. Neither one of those have 20 years of consistency whatsoever. So I'm pretty strict on where I put my money. If the company doesn't have 2 decades of profits, I just don't even do it. Okay, there's over 10,000 different companies. How many stocks do you usually keep in your portfolio? Well, I have 7 different accounts. Okay, each one has anywhere between 7 and 10. Yep, I actually have some CLSK. Not that I picked it, but someone else picked it for me. How do I get started? I'm very interested. I just started following you. Silver Slug, good evening, good evening. It's the first time I heard from you. Okay, what I always suggest is keep following if you really want to have a conversation with me. Now, this part's very important. Listen closely. When I say, if you want to have a conversation, okay, I don't charge anything for my time. I'm not going to try to sell you anything. We're all adults. We know how it works. I've written a bunch of books. I have a course. I got paid services, all that kind of stuff. But I'm not trying to sell you anything. Okay, for those who want more, you know how to get it. All right, we're all adults here. I'm giving the information away for free. You want to have a conversation. I don't do WhatsApp. I don't do Telegram. I don't do text. I don't do emails. I don't do any of that stuff. If you get an email or a communication from me, that most likely ain't me. Because when I say, if you want to have a talk or a conversation, DM me with your number. Don't put your number here. DM me, direct message to my email or to my TikTok account or one of my YouTube accounts, whatever account you're on. Okay, send me your number. I will give you a call. I will not farm it out to someone else. I will personally call you. And I will promise you here, I will not try to sell you anything. Okay, I just want to have a conversation. I want to see what you guys are looking for and how I can deliver that to you. All right, so what do we have? Good evening, always great content, blah, blah, blah. EMMR, okay, got that one. That's on CLSK, okay, got that one. CL. X dividends on the 18th. Okay, recommendations on calls. TikTok, Tommy, how you doing? Drizzle, I'm not quite sure what you mean by that. You're a funny man. I followed and enjoyed. Thank you. Bad as Cam, thank you very much. Nickel picker. Companies that have 20 years of positive growth and profits and 1 week options. Absolutely. Anything else? No. That's it. Consistency of profitability and weekly options. Think about it this way. Okay, most of us work 40, 50 hours, 60 hours a week. You're trading your time for money. Okay, you're spending your health to make money. So when in the later days, you're going to spend your money to get your health back. Anyway, but here's the thing. You're working 30, 40, 50, 60 hours a week. It is very structured. It is. Someone on WhatsApp claims they are you. Is that possible? Hell no. No, I just told you I don't do WhatsApp. Okay? That's why I tell you, if you want to have a conversation, sweet den, send me a number. I personally will call you myself. I don't do WhatsApp. I don't do Telegram. I don't do text messages. And I don't do, what is that other stuff? Snapchat. I don't do any of that stuff. This is where you find me here. Send me your number. I'll give you a call. Simple as that. Okay, so what was I saying? Oh, yeah. So you work 30, 40, 50 hours a week and you're relying on these other companies. You're going to put your money into a company. You don't know anybody there. I don't know anybody at Johnson & Johnson. All right, Sweet Den, you used to love Macy's, but Macy's shit the bed. What do you own? What do we do now? Well, I still have Macy's. Oh, okay, then. He's a fake. He called me. Did he call you on the phone? Sweet Den? That's weird because I don't do WhatsApp. Oh, interesting. Anyway, holy shit, he called you? Really? Oh, because when I say I will call, I will actually call you. You know, I have no problem whatsoever doing a video call. You know, I have no problem doing a Zoom call so you know it is me you're talking to. All right, so, you know, next time he calls, say, hey, let's do a video call. Show me how you set up your account. More than likely they won't. Anyway, all right, let's go back to where we were. PK, thank you for that. A vacation in May. I had a great vacation. Well, it wasn't really great. It was very short. YouTube doesn't allow you to flip your screen. Yep, I know that. When it is a vertical. Yep, I get that. Bro doesn't know how to use a webcam, and we should listen to him for financial advice. Hey, G-Man. I love it, negative people. I have many phone numbers. I can record calls. Okay, cool. So, G-Man, I don't know how to use a webcam. Well, you're absolutely right. I don't. Terribly sorry, but what does a webcam have to do with financial information? Okay? Use your brain, use it. The thing in your head, use it. Okay, whatever. Does your daughter have Instagram? I'm not telling you anything about my daughter. That's just inappropriate. You're not answering chat. Okay, well, you see, Travis, all right, I got 1, 2, 3, 4, 5 chats going at the same time. It just so happens that you're on YouTube, and it just so happens I don't have a moderator on YouTube. So if you look through all the chats on YouTube, you will find there are a lot of people asking inappropriate questions. So I usually have, I usually have moderators to get rid of people like that. So I don't have it on YouTube. So YouTube is not a huge priority for me. Terribly sorry. I am looking to find a moderator that would be on YouTube to get rid of the trolls, so to speak. Would it make sense just to buy 100 shares of our favorite stocks during a pullback? Mindy, it always depends on what your final destination is going to be. Okay, so if you're just buying the stock, why? Why are you buying it? What is your exit plan? If you don't have an exit plan before you enter, it's kind of like a ship without a rudder. You have no direction where it's going. And when you buy a stock, there's no profitability there. Okay, you have to wait for the stock to move, and who knows how long that's going to be. That's why I like covered calls, because I can buy it. Well, this is at what, 107? I could buy it now and sell at 107 and make 1%. Cockpit karaoke pilot, woohoo! Yes, 1% weekly ROI. You're absolutely correct. All right, so let's keep on going. Jane, vacation in Maine. Okay. Mike, hello. Do you think Berkshire will underperform the S&P 500 this year? You know what? I don't even pay attention to Berkshire because Berkshire doesn't have weekly options. Naomi, good evening. Kaldeep, good evening. TJX. Lisa, we'll take a look at TJX tomorrow. Hey, how are you doing, James? Matt, I'm doing awesome, thank you. Why not monthly options? Okay, so not a robot. I never said no to monthly options. No, wait a minute. I did say no to monthly options. How do I start as a beginner? Naomi, my best advice to you is keep coming back. This is the first time I've seen your name here. So keep coming back, keep asking questions. If you want a conversation, DM me with your phone number. I'll give you a buzz. Because if you want to know what to look for, might be able to steer you in a direction. I promise I won't try to sell you anything. Nemo, what has 1% weekly dividend? Nothing. I never said anything had a weekly dividend 1%. John, selling weekly covered calls on HIMS can yield 3 to 6% per week. Yeah, you're absolutely right. I don't do HIMS because I don't think they have dividends. And I don't think they've been around very long. Johnny, which wallet do you feel is safest? Cold wallet, nano? Okay, I don't even do those. Okay, I only do dividend stocks, and dividend stocks don't have anything to do with those wallets. Okay, Matt, what is the name of the website that you just showed a second ago with all the stock info on them? Okay, Matt, you will find the link to my website, The 10MinuteTrader, on the link in the bio. That's up there also. Oh, okay, you got that, Johnny? All right, so we caught up with those questions. Let's go. Ooh, excuse me. Jane, good evening. Have learned something again. Cool beans. Why is this so difficult? Oh, why is this so difficult? Lazy L. Okay, Matt. They are not teaching people to be money makers, that's for sure. Thanks for doing what you do. Thank you, Joey Levi. Let's keep on going. Honestly, I personally wouldn't mind attending your opinion conference. Hey, Matt, DM me with your number. I'll give you a call. We'll have a chat, see what you're up to, see if I can help. Selling calls on monthly dividend stocks requires careful planning around EX dates. Yeah, John, I understand that. I've been doing this for a very long period of time. Now, quickly, because a lot of people ask this question, I usually don't go into this because I just don't like monthlies. So for the fun of it, John, let's do this for the fun of it, okay? Let's take a look at O Realty because everybody seems to like that one. Okay, so here's O Realty. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up. Here we are right here, 56.66. Great. So the current price, 56.66. The next strike price would be the 57. Great. Well, let's take a look at it. Okay, here we are right here. The 57.50 is going for 80 cents a share. Great. Wonderful. Okay. The last 30 days. 16 right here. Okay, so John, here is the 30-day chart. 30 days ago, today. 30 days ago, we're at 57.50. Okay, we went up to 58. We dropped down to 56, back up to 59. Now we're at 56 again. Great. Now, tell me, where is it going to be in 30 days? This is 30 days. Where is it going to be in 30 days? So let's say, hypothetically, I do the 57s. So let's do the 57s. Let's get out of there. Covered call right there. The 57s right there. Let's do just one contract so we don't scare away people with big numbers. Okay, there it is. At the market right there. Send it off and boom, here it is. Buy one, Covered call, O Realty 100, that's the weeklies. 15 August 25, that's the very next month out. That's 1 month out. Okay, the 5750 call, O Market at the market to open. We're doing 2 trades. We're buying the stock, we're selling the option. It's a covered call. Great. What's my profit? $150. What is it costing me? $5,600. Let's do some quick math. You ready? Calculator. Find out your rate of return. We take the profit right there. Maximum profit, $150. Okay, $150. To find out the rate of return, we take the profit, $150, divided by the cost of the trade, including commissions and fees, $5,600. So wait a second, hold tight. Divided by $5,600, and we come to a grand total of 2.6%. Wow, that's awesome! 2.6% multiplied by 12, because there's only 12 months in the year, and that comes to 32%. That's great. However, I like weekly options, 1% a week. 1% a week comes to 52% a year. So how can you possibly tell me that 32% is better than 50%? I don't do monthly options. They just don't pay the same. And to make matters worse, 30 days ago, now, tell me where it's going to be in 30 days. I can give you a good idea where it's going to be in 5 days. 5 days is easy. 30 days, not so much. I don't do monthlies because they just don't work for me. They may work for you, that's fine. They just don't work for me. I don't do them, I don't want to do them, and I'm tired of explaining why I don't like them. Okay? What option income fund does this? There is no option income fund yet. I'm going to be creating one. So in order to create one, I need 2 years of verifiable back testing. And this is not back testing, this is actually doing them. So if you look back to all the videos, since I first flipped on the camera and started trading live, you will see that this December, I will have 2 years of full verifiable data. At that point, I will create an income fund. It's going to guarantee a minimum of 20% per year. That's what my commitment to you guys are. Now, you're just here at the building phase. This is the foundation that I'm building. And also, it's a video diary for my children and my grandchildren. Sweet Den, thank you. Glad you like it. Never said monthly options. Said weekly. No. Let me see if I go this back. Back here, John. Where did you say that? Selling calls on monthly dividend stocks requires careful planning around the EX dividend dates. Okay. I don't do monthlies. They just don't pay. Sorry. They just don't pay for me. Some people like them because it's less work and less effort. Well, it kind of is. You're only doing it once or twice a month. Well, I'm retired and I don't mind 5 or 10 minutes a day. Because 5 or 10 minutes a day gives me 1% a week. And if you've seen some of my accounts, excuse me. Whoops. Oh, go back here again. Let's take a quick look so you get a good understanding. Okay, got my little hamburger weekly trades 2025. That's where we are at the moment. Come on. Okay, here are my weekly options. Okay, account number 1 started out in January, 151. Account number 2 started out in January, 143. Account number 3 started out in January, 114. Well, 114, 1% of 114 is $1,100 a week for 1 hour. 1 hour of my time on just this one account is worth $1,000 an hour. This account here, 143, that's $1,400 a week. So for 1 hour of my time a week, that's $1,400 an hour just for 1 hour of my time. Now, I don't expect any of you to be able to comprehend this or to be able to equate this because I'm 61. It took me a long time to get to this point. Okay, you may have an account with 20,000 or 30,000. You may be 20, 30, 40 years old. You got a long way to go until you're 60. At some point in time, you will retire. At some point in time, you have a choice to make. And it's only two. 1, 2. Flip a coin. Heads, tails. Heads, I win. Tails, I lose. You had a choice to make when you retire. you take care of your own money, take responsibility, man up, or you give it to someone else. And I can basically give you a good idea that if you give it to someone else, they don't have your highest interest in mind. It just is what it is. Nobody has more interest in your money than you. Never blindly listen to anyone on YouTube. I don't know what the hell you guys listen to me for. What the hell do I know? I know how to read numbers. I know how to add. I know how to subtract. I know how to read a chart, high, low, where it was, where it is, where it's going. That's what I know. Other than that, you should do your own research. You should take a look at where you're putting your money. Does it make sense? Do you like this company? Are you willing to hold on to this company? They're very simple questions. The trading strategy I'm showing you was created for my 9-year-old daughter back in 2008. Okay, I got 4 kids, 2 girls, 2 boys. Okay, my little girl jumps on my lap and said, "Daddy, what are you doing? Can you teach me?" Who the hell would ever think a 9-year-old little girl wants to learn how to trade stocks? Most adults don't get it. So for my 9-year-old, simple, safe, predictable, consistent, less than 10 minutes a day. That's it. 10 minutes a day is less than an hour a week. 1% of $151,000 is $1,500. 10 minutes a day, 1 week, that's 1 hour. That's $1,500 an hour. Why the hell not? Now, granted, you may be 20, 30, 40, 50, and you may not have 100,000. You may have more, you may have less. But 1% is 1% no matter which way you look at it. 1% a week, over the year, that's 50%. You get 50 grand, 50% is 25 grand. If you have 25 grand, 50% is 1250. If you have $1 million, 50% is 500,000. If it makes sense, why the hell not? Okay? It's past 11. My time is done. You guys have a great night. We'll be here doing the same thing again tomorrow night. You got questions, ask. If I didn't get to your questions, I'm terribly sorry. I used to answer every single question. Now it's just impossible because I got way too many people showing up. So every night, anywhere between 5,000 and 25,000 people will show up, and a lot of people will ask questions. And I try to get to every single one of them. So if I didn't get to your question, I'm going to apologize now. I'm thinking of hiring someone to help me go through all the questions because there are a lot of stupid questions. There are a lot of repetitive questions. Okay. Other than that, you guys have a great night, and we'll see you again tomorrow. So now the end is here, and so I face the final curtain. Why is that not turning off? My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived a life that's full.